Margaret Thatcher will be remembered for many things, all of them hateful or saintly, depending on the colour of your rosette. One class of people certainly got good times under her regime: capitalists. Stock market investors never had it so good. Everyday savers enjoyed a purple patch too. Under Mrs T, real returns on the UK stock market, excluding dividends but over and above the rate of inflation, were the highest since at least 1800. A fantastic 5% a year on average, in fact, in the 1980s. Cash in the bank also paid standout gains, giving savers the best rate of return, once more above inflation, since before the Great Depression. Rewarding thrifty households was, of course, a big part of Maggie's big promise in 1979. But beating inflation and allowing private savers to keep hold of their savings did dent one financial asset: gold. Global inflation had driven gold higher in the 1970s, but in Britain, as in much of the rest of the world, ordinary savers were actually blocked from buying it for investment. Mrs Thatcher famously preferred economic freedom, and she spoke out against such exchange controls when gold coin buyers were blocked in the late 60s, calling it a ridiculous order and an indictment of the then Labour government's woeful mismanagement of the economy. On taking power in 1979, one of the first acts of the Thatcher administration was to abolish exchange controls, freeing the movement of capital out of and into Britain. We've already seen what that helped do for investors and savers, but for gold? Just when British households could buy all they wanted, they started to need it much less. This is a lesson from history, we think, as Maggie Thatcher's capitalist freedoms are slowly unwound, first with negative real rates of interest to savers, and now with the return of exchange controls to Europe, starting in Cyprus. To buy the safest gold and silver at the lowest prices in Zurich, Switzerland today, go to BullionVault.com.